And joining me now in the studio is Mr. Roger Schlesinger. In some circles, he's known as the Mortgage Minute Guy, specifically our circle. Roger, good to see you again.
Good to see you, Don.
You know, we had what I would refer to as a fascinating conversation on the program last week, because you were not happy with the way things are going on in the real estate industry and in the mortgage industry. And one of the things that you said that really caught my attention when I asked about the difficulties in obtaining a mortgage, you said, well, if you're poor, it's very hard. If you're rich, it's impossible.
Yeah, that's pretty much true.
So let's talk about the people in the middle. People in the middle that if they're not rich, they're not poor, they're looking to get a mortgage, maybe they want to refinance their mortgage. What are their options these days?
Well, the options are great. I mean, it's really like a kid in a candy store who has braces. Which you can look at all this great candy and you can't eat them. But that's really what's happening there. We have terrific rates. This week, the 30-year fix for conforming loan limits, 3 7/8, 1.5 points, 3.974 APR. We have a 15-year fix at 3.5 with 1.5 points. I mean, these are amazing rates. But you have to be patient. You have to have everything together. Nothing slips by, and I mean nothing slips by. They've even gone so far as to change the way that they look at rental real estate income. And we've had 3 or 4 people who for years have been able to get loans who can't get loans now because they've changed it.
So basically what it's come down to, it's the qualifying that has become much more difficult, in some cases nearly impossible.
Yeah, and the qualifying also goes for the house. Appraisers are there to do one thing, make sure they can bring it in as low as possible, and the errors or the misrepresentations are just becoming legion. I mean, it's unbelievable. We just had one for a small house at the beach, and somehow he got it lower than every other comp sold for. It turned out that 3 of the comps sold a year ago that were no good, and 2 of them were short sales. He got the value lower than the short sale, which is what the bank owes, you know, what the seller owed to the bank. So it's not even a realistic view of that house. And so I called the borrower up, or he's a borrower to us now because he wants to get a new loan. I said, it came in low. Is there anything outstanding about your house that didn't show up? He said, nothing I can think of except maybe the view. I said, what view? He said, well, I have an ocean view. Left it off. How do you leave an ocean view off? I said, I can't believe that. Send me a picture. He took one from his couch and showed me the ocean. So, I mean, that's what we're running into today is that everybody has their own self-interest, and it's very difficult to get all these moving parts together and get you qualified. But we do get it done. It's
180 degrees on the appraisal side of things from what it was just 3 or 4 years ago. But 3 or 4 years ago, a $500,000 house was getting appraised at $700,000. Now it's just the other way around, isn't it?
Yeah, they're bringing everything down to, and the way they're doing it, where they can't just do it by honesty and by what it shows, is they misrepresent. They don't, for instance, with this beach one, they didn't say that the other 2 sales were short sales.
Well, it's funny because, I mean, you know, around the water cooler, I guess we would call this CYA, but we're on television, so we'll call it cover your hiney. It's basically what's going on, right?
That's exactly what's going on in everything, and every underwriter wants everything done. It's not, for instance, I have a dear friend, and they said, well, he has a second house. I said, not that I know of. I've known him for years. Well, it turned out he co-signed for his sister-in-law's house.
Oh, boy.
Well, usually that's easy. Send me 3 checks and we're done. Not anymore. Send me 12 checks. And if they're not clear, I want to see 12 bank statements showing that the sister-in-law is making the payment, not him. And this gentleman is retiring with over $2 million in his retirement account, and we're talking about a $250,000 house. So it has nothing to do with real qualifications. It has to do with the little nitpicking that they can get away with to turn down a loan.
So for people who have patience, we'll say the patience of Job, and they're still looking for financing either in a refi or a new purchase, and how do they get a hold of you to pick your brain?
They can either email me at mortgageminuteguy.com or they can call us at 866-288-0088. And I'm being overly dramatic today because I'm really frustrated because I have to fight with so many appraisers and so many underwriters. We are getting loans through, but you're going to have to be patient.
Once again, the Mortgage Minute Guy, Roger Schlesinger, and again, please give him a call or visit him at mortgageminuteguy.com. And again, be patient. Roger, thanks so much.
Thank you, Don.
Take care.